Welcome to the 2025 Economic Preparation Channel. I'm your host, Tony. Thank you for joining me on this Tuesday edition. Here in the studio. Please be sure to subscribe to this channel. Please to me for the latest interpretation of financial news as it becomes available. As we head into this midweek of 2025 here, after the holidays and after the inauguration of our new president, Donald Trump, the Dow Jones continues to rise here as investors feel that, quote, Trump's tone on tariffs is softer than in fear. So things are looking pretty good right now for investors and for other people as the news comes out that the Dow Jones added 244 points, the S&P gained about 0.4%, and the Nasdaq Composite flickered around flat. So several big tech stocks took a leg up. Of course, Amazon, Alphabet, Meta, Apple, and others gained a percentage point or so on this news as we continue into the first 100 days of this new administration. And so the tariffs on Mexico and Canada are being considered. 25% is the forecasted percentage that President Trump has issued, but we will see how that will play out. And how that will work out with other countries and with the trade between with the NAFTA, the rules that we had in place with Mexico and Canada before, and how that will affect big business and big policy. So we will see. But in the meantime, Apple shares fall after two downgrades. Apple's one of the big tech companies that pulled back nearly 4% today after two firms downgraded the iPhone maker ahead of the opening bell. Jefferies downgraded Apple to underperform, warning that revenue could disappoint investors. So this is the first quarter of 2025. It's very hard to keep those revenues up in the first quarter as we just went past the holiday season. Apple is currently trading at $221.45 as of the opening bell. That's down about 3.71% here from the opening bell. U.S. bonds continue to rise as tariffs respite for China eases inflation fears. So Bloomberg.com and Yahoo Finance in conjunction is reporting that the bonds are rising, the bond yields are rising, and inflation fears are coming down in the month of January. Even though prices have not been coming down, as you and I know, in food and grocery, transportation, and utilities, but the overall sentiment is coming down. The 10-year yield fell as much as 10 basis points to 4.53% on Tuesday as the market reopened after the holiday, of course. Meanwhile, the dollar rallied as Trump said he plans to impose 25% tariffs on Mexico and Canada that we spoke about in the last article just recently now. So you can expect more volatility in these markets as changes go on. Like I said, the Dow Jones is up 300 points right now. It just opened as of 9:30, I believe, Eastern time. And so that's what we can see. But in any event, billionaires are growing faster, richer than ever. And this is worldwide. This is according to Oxfam. This article here is saying that Oxfam says trillionaires are expected to emerge within the next decade as the richest 1% now own 45% of the global wealth, while 44% of humanity lives on less than $6.85 a day. Technically, no surprise there to most of you here, ladies and gentlemen. We know that the rich get richer and the poor get poorer. But I will say this, though. The value of the dollar, it is taking more dollars now to even get less goods than we got before. And so the value of the dollar is declining so much now that, it used to be, and you can talk more of you guys that are more experienced than me, can talk about this 45 years ago or 50 years ago, that a millionaire, if you were a millionaire, that was considered, doing very well than most average people, or if you were making above $250,000 a year, you were doing take home, after taxes, you were doing better than a lot of the majority of Americans. Now, because of the way the dollar is debased and devalued so much, and because the world economy has, expanded and only a certain amount of people have so much money to spend because of the money supply, $1 million or $250,000 is like, in certain cities, it's not, it's good, but it's not like what it used to be. It doesn't go as far as it used to go. And you and I know that. I'm just telling you the truth. The millionaires, so now we've got billionaires, we've got mega billionaires with hundreds of billions of dollars that they can't spend in a lifetime. And now we're on the verge of having trillionaires, allegedly, according to this article. This is not something that I'm making up here. It said that last year we saw the emergence of 204 new billionaires, with billionaire wealth increasing by $2 trillion in 2024. And so, there's a great disparity here. And we saw this in the Great Depression, too. The rich got absolutely richer and the poor got poorer. But the difference was the rich were able to share their money, distribute their money, and not take it just overseas, but they were able to share their money to get the country back on track with the New Deal and all of those programs. But the difference is today is that the rich are not in that mode now. They're in the super rich, the mega rich, excuse me, not just the regular rich, but the super rich, the top 0.00%, 1%. They're not in that giving merit, that giving spirit. And so we're going to get more disparity like this, according to the Oxfam report. 1 in 10 women globally live in extreme poverty. So be thankful. We're thankful today that we live in one of the greatest countries, America, and not only the greatest countries, but other countries too are great too. Europe, Asia, Africa, Latin America, other countries are great too. Be thankful that we're living, that we can live better than a majority of the world. With 44% of humanity lives on less than $6.85 a day. So no matter how bad things get here, we're not as bad as extreme poverty or something crazy, like that. So we have a lot to be thankful for to God for, even if the inflation doesn't come down to the projected 2% that everybody is hoping for, or supposedly, we do live better than the majority of the world. So we have to be thankful for that. Remember, a lot of people don't live on less than $100 a month or even a day. So core inflation rate slows to 3.2% in December, less than expected. Listen, this is reported by CNBC.com. This came out a couple days ago. And so inflation is slowing down according to official reports. Like I said, once again, this is official reports from the BLS, the Bureau of Labor Statistics. So stock market is going to be surging short term because they feel like, hey, we got more money to spend. But the thing that's not surging is two things that's going to be affecting us going into the second half of this first quarter, going into February, that people are going to be watching. The unemployment rate, number one, right? And also, number two, how far the U.S. dollar stretches in terms of the price index. You can see the consumer price index right now is at 3.2% last year in December. So, and that doesn't include food and energy, as you know. They want to see if this rises. So if prices rise, if this happens in February, then you know that we're going to be in for a long summer. Number one, prices rise on everything. Food, energy, gas, transportation, utility bills, and people have less disposable income as a result after paying their bills. Number two, we're going to see the unemployment rate. If the unemployment rate rises, in conjunction with the prices rising, that spells big trouble for the U.S. economy in terms of possibly going into a recession. Now, will this recession happen in the summer and the fall? It's up. It's anybody's guess. Nobody knows because we don't know. We still haven't felt the effects of all the money printing from the previous administration they did to get us through the crisis. We'll be feeling that probably toward the end of this year into next year. And that's the problem. It takes a long time. So those are two things that people are going to be watching going into the end of this month and into February. Will the unemployment rate continue to rise? And will the prices continue to rise on goods and services as we come out of this holiday season? So that's what we're going to be watching. And also we're going to be watching the futures market as well to see if the dollar can hold its relative strength against other currencies as we can, continue. If President Trump decides, and this administration decides to print up more money to handle what's going on in the border and also what's going on with the infrastructure, American infrastructure that's crumbling. So we have to wait and see how those are going to play out. We will know more in the future. But until then, stay blessed, and I'll talk to you very soon on the next episode. God bless.